Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday, and it's been a long week. Lots of volatility, lots of movement. Every day there's been some different type of historic headline almost, and it seems like a lot of the technical damage is starting to add up. As traders, as active market participants, we try and trade trends, and I know for me, I trade that upper trend, the 8 and 21-day moving average. I always preach it until I'm blue in the face, and lately I've been a little red in the face. That is when you want to take your portfolio approach off. That is when you want to, get tactical, look for two-way trades, some small bounces with the RDR, some H-cell setups, and be tactical and light on your feet, because we've been talking for the past month how, high beta tech, not only is it not above the 8 and 21-day, half of those names or more are below the 200-day, technology leading lower, banks broken, retail seem to have, hit a snag, and then you also have the home builders that put a topping tail earlier in the week. So a lot of things were adding up that, this market feels a heck of a lot more broken than, than constructive. So the question is, can you be short, and how do you short? Lots of stocks have been a little bit better to short than the indices, depending, and a lot of the moves have been happening overnight. So there is frustration out there, but there is a lot of movement. And I think guys are at least not, trying to catch falling knives. They're not trying to go against trends. They're just trying to, put together a week and a month and be out of the way, because, in the way it could be, painful. You look here at the chart of the spiders, okay? Here we are. We closed on the dead lows right into major support. You could say that you have this channel here, which is pretty obvious, okay? It also looks a little bit like a head and shoulders pattern, where you have the left shoulder, your head, your right shoulder, and it closed right on, what could be construed as a neckline, right on the 100-day that's been, holding for the majority of the time. Or actually, is this the 150-day? No, this is the 150-day. So how do you just buy into that? I can't. The good book would say be short. After hours, I came back from my Fox Business segment, and the spiders were trading like 199.60, so I started shorting a little bit, because it does feel as if, if you wanted to be short for a pattern break, it could happen without you, so you have to have some, okay? And if it opens up, you could probably maybe short a rally, because that's been working too. And or you just said, I'm not buying it on the trend line, I'm not shorting it here. We're down 1, 2, 3, 4, almost 4 to 5 days. The oscillate is getting there. I'm just going to stay out of the way and see. You would think that we can get a test of the 200-day at least, right? And you also could see that if this were a head and shoulders pattern with the high here of 208 with the neckline around 199, what is that? 208, 199, that's 9 points. That brings you all the way down to here. Brings you down to this gap at some point right around 190. So it does feel a heck of a lot more broken than constructive, but these markets trade. You look at the XLF, look how broken that's been. This, had your outside day here when it broke this upper flag, coming into the new year. This looked good. This is when we wrote, the 2015 thesis, thinking we can get some follow through to the upside if the market started quick. Okay, I was actually long the banks in here, and on this day, got out. Look at that outside potent day that engulfed this entire range, which created a false breakout below the 8-day. You at least reduce, let alone get out. And then, here, if you waited, and then it confirmed. This confirmed that. That was probably the short entry for some. Or maybe even said, I'll get out of my long here. We just broke the 8 and 21-day. I'm not going to be as tight as Red Dog with the 8-day. I'm going to wait for the 21-day, and you got out. And now look where it is, all the way down on the 200-day. So the question is, do we break below the 200-day? Will this be the first sector to do so in a while, the first time for the banks to do so in a while? It did it here, stayed below for 2 days, and was a false breakdown. I'm not so sure now. Here is the same type of support, in the XLF that you see where the spiders are now, right here. So it'll be interesting to see, what happens. The Qs, also broke that 100 level, okay, which, again, is a level where you don't just buy into a broken level. It's below the 8, below the 21-day. At this point was when I think most guys probably got a little out of the way when it broke the 8 and the 21-day, right there. Came back up, retested, failed. And now it seems also like, lower prices could be in store. We'll see what happens with Intel. Remember that XHB topping tail that I showed you guys, or as soon as it happened on the KBH earnings, I was like, you probably want to sell now. You know, topping tail could be created, and it created an outside day. Now look at the downside follow through. You know, that's when trends change. Here's when it went to the upside. You know, here's where it resumed, and then that loose, wide outside day, you got to take notice. You could get out of the way and save yourself some agony. And now see what happens next. It's coming into support and bigger supports down there. What do the RTHs do? RTHs, this too, okay, false breakouts. You had a gap up right here, if you remember, okay, gap up, you know, looking good, looking strong, above the 8 and 21 day, following a very strong trend. Retail is great, great, great. Then boom, this day fills that gap right away. It shouldn't have filled the gap if it was going to be strong. It should have held that, went sideways and continued. So that was red flag number one. And now look where it is, below the 8 and 21 day. And if you're selling it now, you miss some of your signals here, and now you know, it's going to be coming into maybe some bigger support. So you got to be careful there too. That's not looking so great, losing momentum. You know, then we go to, you know, high beta names. I've been going over it so long. I haven't been excited to really buy any of these in so long. Google opened up a little bit and, you know, couldn't hold it. You know, still above the prior lows, but below all the moving averages. Amazon. Heading right back down, was upgraded, tried to reverse, boom, below all the moving averages, very weak, okay, heading into some big support. Netflix was up a little bit, I think got upgraded again, okay, but it had no traction. Maybe moving forward, it could even be another short if it were to, you know, break this level here. And then, you know, I came in today with a little Apple and a little Twitter, long, because yesterday we reversed a little bit, and Apple seemed as if it was going to try and hold momentum. And then I saw early on, Mizuho downgraded it. So right there in my head, I'm like, Apple might be different today. Plus the futures were higher. It wasn't really perky. So pre-market, I'm like, you know, I'm selling some of my Apple. It's up 20 cents. I feel lucky. Held a little bit. And then as it started to go negative and was down 50 cents, I'm like, I'm out of the way. If you guys want to wait till 108.80, that's fine, because that's the upper area. But then that should be your stop, because you can go back into the lower end of the range. And if you look at Apple, okay, it broke, I guess I drew this line this morning, this upper level, which if it was strong, it would have kept this momentum. Instead, it broke below. So hopefully you use that as your stop, because it could head back into this lower end of the range. And why sit through that? So, you know, it made sense to be a little long here, which is why I took it home. But then you have a stop, and you get the, you know what, out of the way, instead of sitting through that. And now you're like, oh, what do I do next? Now tomorrow, if it opened down, if we happen to open down, you could buy it, because you got out of it in here. I also had Twitter. You know, Twitter looked decent, and it was green. It went down like 40 cents. I'm like, you know what? I'm going to give it to the first 5-minute low, and that's when I get out, and that's when I left the virtual trading floor. It did not hold. This looked good, didn't it? Looked okay. Broke above this, holding in tight, okay? And basically, your stop could have been 38.80. That's what I wrote in my note. I said, if it holds 38.80, you have a nice flag for potential continuation. You know what? It failed with authority. Right back to here where this shouldn't have happened. So that trade changed. When the market trades and you trade real time, you change when the setup changes. Now we'll have to figure out what's next there. You know, Facebook 2 days ago, I was thinking short, 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 got a double upgrade, and it didn't go up, so that told you something yesterday. Double upgrade, market was kind of, you know, off the lows, and it was still weak. Be careful. So in the morning call, I talked about the inflection point at like 75.80. And when it was right there, I tweeted. I'm like, Facebook at inflection point. On the virtual trading floor, you guys saw me short. I didn't have time to retweet and say I'm short Facebook. It was, you do what you want to do if you watch the morning call, which you should. Okay, I think I even had it on Morning Call Express. You know, it's free. And in my note, listed that spot. So there's some prep you could have done. And look what Facebook did. Oh, look, this was from the morning call. Showed you how, you know, this was your false breakout, coming into a key level, a trend that's been in place, and boom, it broke it. This was actually a good short. You could have shorted this. I shorted, you know, a decent amount, and I made like $1 or so on it, and then at the end of the day, made a little bit more. And now the question is, you know, can it get to the 200-day? It could. It's a no man's land now, unless it like engulfs this tomorrow, which you can't really think like that, and does a false breakdown. You know, chances are it could head lower. But this was a nice tight pattern, and it gave you a nice tight short. And I'm not good at shorting, but this one I felt comfortable with, because if it broke this area, it has a lot of liquidity. It's not thin and wide. So I went with it. And now I'm not so sure because look where this thing has come from. It's had a big move. We've seen this before, but this also is a little bit of a trend that's been intact for quite some time, right? First time breaking really below this trend since the gap. If you've been long it this whole time, trim some at least. Sometimes, I know back in the, at times, people trimmed when it broke this channel here and never bought back, or probably trimmed here when it broke this support. You felt really good about yourself, but then it never got back involved. But now, if you are active, small trend line broke. Who knows? You could see the 70, 90. You might not want to sit, but I guess if you're a macro guy and you've been in it since here, it doesn't really matter to you. But if you're a trader, there was a nice cash flow short today. And then moving on, let's see, what did Tesla do today? Tesla reversed a little bit off of that gap down. Nothing there. And then none of the banks tried to hold a prior low, and then pow. Look at that. That's gross. Anything that breaks, by the way, below the 200-day moving average, okay, is not something you sit in and you hold. Okay, for me, when this happened, I was out. This should not have happened. It was above a prior high, looking good. Okay, I was in it also with everybody thinking, okay, this thing could continue. The banks look great into the end of the year. And then that happened. That was your wake-up call. Engulfed this entire range. Did you see this type of bar during this entire run? No. At least that should have got you out of some. And then, this happened. It broke. They tried to hold it in there. Maybe you said, oh, Red Dog, I'm not as tight as you. I've owned it from all the way down here. I'm going to stay one more day. And then on that day is when you had to get out. Broke not only the 8, but it also broke the 21-day. So as a momentum active trader, that was not a momentum active swing trade anymore. You're gone. Okay, if you got out here, you're not in for this friggin' mess. And that's been pretty mess. Now it's well below the 200-day, so it's very oversold. Maybe get a tiny little scalp bounce, but it's gross. And I did have Citigroup and Bank of America on my 2015 list that if momentum came in and flows came in the way they looked, they could have continued. But my rules in the whole front pages, I do not sit and hold things that are not above their 8 and 21-day. Okay, and if you're an investor and you're like, okay, I'm just going to buy, a small percentage of my account in everything that he just listed. I don't care what it does. I don't care about pricing. Every year, it's worked out pretty well, which it has. Then you're sitting in it and you're like, oh, this is painful, but it is what it is. That's what you chose to do instead of waiting for me to be involved also, or waiting for, the technical setup to go with the idea, because you need the market to confirm an idea. You can't just, have an idea without the price action telling you that it looks okay. Citigroup also. Citigroup had this move, okay, which was really good. I remember we made some good money here on this move. Okay, false breakout, should have sold it right here, okay, whatever you had left. Then you had another rally. This did not make highs with the rest of the banks, so right away it showed you weakness. Bank of America was on highs, Morgan Stanley was on highs, this wasn't. Went below the 8 and 21-day right here. So that's when I think was the last time I was involved with Citigroup, and now look where it is all the way here. I tried it once today, it didn't work. And now it's at a low, it's below the 200-day, below the moving averages. It's in a void for a while before we figure out what's next, until you see some kind of gap up or igniting bar, and then you have to wait for it to confirm it. I wouldn't be just shorted now after the move from here, but that's why we talk about the 8 and 21-day. Write that down. If I'm an active trader trying to be involved in swing longs, I'm only involved in them if it's above the 8 and 21-day. Otherwise, it's not a hold. I go from portfolio to tactical, and I take this situation out if it happens to be that way. And then below the 200-day, if you're an intermediate guy, that's your sell, especially if it stays below it for a few sessions, so it's not considered a trap. But it is what it is. The market's going to do what it wants to, and you have to use your keyboard to manage your positions in your process. Today, okay, I actually tweeted out when Kite was only down $2. I'm like, if you were in Kite from the $45 breakout, this is probably a good spot to get out. And some people, got actually shorted. And if you did so, you made some nice money. Okay, look at the size of that move. Okay, this was one of the, a calculated breakout right here, another calculated breakout right there, very extended. Pow! You could have got out and saved yourself an enormous amount of pain, and why give some of it back? Or at least right here. If you missed this portion of it when it took out this low, you could have been a seller, and now you wait and see. Now what did it do? This broke the 8-day. It's been above the 8-day all the way since 50 bucks. It's been above the 8 and 21 day for the whole trend. So maybe it gets down to here. You could try it. So if you sold some strength, you could buy it back here. If you don't, if you never had it, maybe we'll see if a trade develops. All we know now is today's low to use as a gauge. What did the IBBs do? Did it hold? IBBs could not break out above this high here, held, and then this was a stop that we listed. So if you get out, you're probably safer. If it hangs in there and the market bounces off support, you could always get back. But now this is below the 8 and 21 day, losing some momentum. Don't stick around. Don't wait. Okay? To me, this 1-2 handle setup just told me that some momentum left. And let it give you some time to rebuild. I know after this one, everyone got bearish and short, and then that happened. So maybe this is the same, but at this point, I would at least be out, let alone short. Okay, and if you're short, that could work too. You'll see what happens. Maybe you retest this moving average. Gold. Whew. Gold basically is confirming, the currency war. People are a little worried, and we talked about it waking up right here. It became a choppy mess, but then during this process, it started to hold in much better. This was your last little initial buy. Unfortunately, it was pretty weak for 2 days, so maybe some people, got short. I mentioned into this, get back to tier 1. So if you had tier 1, you still made money. But doesn't mean if you say go, sell some. If you're in tier 1 and then this is your additional tier above this, this was the sell into 119. But hold some for that, But now you'll see what happens with this gap. We'll see what's next. Oil, pre-market was friggin' in the gap. Guys were long it from the past 2 days. Like, red dog, what's some levels? First of all, look at this trend. Remember I said, just to learn from, here's when it broke the 8 and 21 day. That was your intermediate active out. And it also broke the 200 day right there, 36. You could have been done with it right there because it never got back above the 200 day. But anyway, broke another support. This morning, it was actually in this gap. The gap could have been filled all the way up to 1969. I think it went to 1935 and reversed. Engulfed yesterday, so this still is showing you have to be quick and nimble and just take trades when it's there. XLE also was up and reversed. Okay, here's your red dog reversal. Gave you that day-and-a-half trade. It was up $1 pre-market. So if you took, like we said yesterday, a few thousand shares here and made a nice little scalp into this setup, and you took 1,000 or whatever overnight, when it's up $1, you could have sold a nice amount, and then once it went negative, you get out of the way. What I do again with overnights, if that were me and I was in 3,000 XLE, and I made a nice trade and I held 1,000, typically I walk in the morning call, it's up $1, I sell half, sell 500, make the 90 cents, book it, and then do the morning call, do all my stuff, I come back and then I see where it is, and then depending on how it acts, I could get back to what I had overnight or back to what I had the original day, intraday, because I'm in control, or starts to fade, maybe there's a 5-minute, if you look here, maybe there was even a 5-minute spot to, trade against in the gap. Let's see, from the gap up, besides just going negative. Yeah, here, okay. Right there, you had your first move. This could have been your stop, right when it traded below that opening print, which was 74.12. Or you could have just waited, went negative. You're out, because you never know where it's going to go. Came back up, couldn't really retrace more than half of this move, and then little by little, it probably went lower. So that was your opening move. Second bar took this out. Get out of the way. Why not? Or you sold some, you want to wait, you waited for some, or you're saying, you know what, I'm going to give my last tier until the low of the prior day just in case, which also might work. But it closed in the lows and still not much traction. I'm looking around and I'm seeing nothing that I'm so compelled to buy, nothing that I'm like excited that's going to break out in tight. If anything, there were some short setups like Facebook and whatnot, and now it feels as if market might try and break this support. I wonder why it's up a little bit after hours. Who knows? I guess we'll see what happens with Intel. Intel kind of priced for a really good report. Looks as if it's one of the chosen ones. It could help the market if the conference call goes well and the guidance is okay. But overall, it's priced very well for something strong. It's got to be a great report. Look where it came from. It's up here. You would think that there's money behind it, so if it is good, it can go, but we shall see. We'll see where it is tomorrow. The low here is like 35.26. And then next week, will be all the big boy earnings. So we'll see what happens, and we'll see, does the intermediate level hold, or do we have the October type correction? We're about 4% off the highs. Momentum levels have been broken. We're at a spot that is oversold enough to bounce but doesn't have to. And the question is, will this measured move of this type of pattern get filled? We closed on the lows, but again, from here to here, a little tricky to be short. It's a tricky long and a tricky short. You're right on the friggin' trend line, so you don't have to do a heck of a lot. You could have just went out flat, or maybe your thesis is that we're going to break down. All those charts that Scott just showed me are more broken than constructive. I think it happens. Even if it gaps up, I don't care. I could take it because at some point we're going to break this. Then you stay short some. And tomorrow is Friday. I'm going to be trading on a short hills. It's actually been a good week. I'm up every day, trading, pretty tactical. I think the levels have been pretty solid. That one day was a tough one when they squeezed the Dow up 270 points. And then once you were comfortable thinking you couldn't miss it, you bought a pullback, and then it friggin' got crushed. And that was like the key right there, saying loose and wide. That shouldn't have happened, and we've been pretty much weaker ever since. So now the question again is, do we break intermediate support? Because a lot of the other sectors have all broken it, like the XLF to say the least. And we shall see. It's only January 15th. A lot of January left, a lot of month left, a lot of earnings left, and we're in interesting times. So the volatility's here, and might as well play to it because there is movement. Last year, when we were in that slow little grind with low volume, and we were 100 days without a 1% move, everyone's complaining, and now everyone's complaining because we have 100-point moves happen within a 200 to 300-point range in a day. So trade the ranges, play to your edge and to your strengths, and work on what you're not doing well, and keep trying to make progress. Scott Redler, T3 Live. See you tomorrow morning. No morning call by me, but I will have my abbreviated note. Have a good night.